Bada bing, bada boom, ladies and gentlemen. We've seen the 50 basis point cut, and we've gone straight into the next FOMC probability right here. It's got a 30.2% chance of another 50 basis point cut, and that probability, of course, could increase rapidly as it's done over the last week. I mean, over the last week, for example, it was at 6.6% of 2 consecutive 50 basis point cuts. Now we've seen the first one, and now we've got a 30% chance of another one just following it up here in 49 days. So very aggressive cutting cycle has begun. The Federal Reserve has started, right, putting interest rates lower, which is decreasing the cost of debt, okay, and just overall improving people's purchasing power, whether it be businesses or individuals or whatever it may be. Fact of the matter is, this is great for markets. Interest rates going down is great for markets, although the effect takes a while to settle in. And although in past we've seen some situations where interest rates go down and markets go down with them, but that's not necessarily because the interest rates going down led to the markets dropping, okay? It's probably because they cut interest rates due to the existing market environment or due to the existing economic environment. So this is a nuanced thing. There's not a direct connection between markets and interest rates. There's actually not really many established trends at all between markets and interest rates. There's a lot of speculation, a lot of what people think, but the only thing we know for sure is that the actual effect of interest rates going downwards is good for markets in a longer term basis. Again, it just takes a while to settle in. But I think this was good. I think it was great. We saw a 50 basis point cut. I mentioned it yesterday in my video. By the way, 65% of people right now think Bitcoin will break all-time highs by the end of the year. 14%. Or 11%, I should say I don't know. So the vast majority of my community is macro bullish. If we go to my video yesterday, I'll just show you the thumbnail and title just so you can see it. I made a video, rate cuts today, is Bitcoin doomed to fail? My whole kind of conclusion in that video is if we saw a 25 basis point cut, Bitcoin would be more likely to fail. Although, of course, the probability, even at the time of making that video, was about a 63% chance of a 50 basis point cut. And I said if we saw that 50 basis point cut, Bitcoin's bullish scenario is looking much more likely. I've never not been macro bullish, not even in the slightest. I believe that Bitcoin is in a bullish macro structure, and we're going to get into Bitcoin in just a second here after we look at a couple of things. First and foremost, the Bitcoin exchange, and then second of all, the BingX exchange, okay? These are the two exchanges I advertise on this YouTube channel. There's very little difference between them. One of them is a bit more low-key, which is Bitcoin, and one of them is a bit more prominent, which is BingX, but they're both global non-KYC, and they've both never been hacked before, and they've both got hundreds of trading pairs on coins, and with my referral link down below, both of them will give you a 15% trading fee discount only if you sign up with my referral link, and that discount lasts for your lifetime on the exchange. As you can see on the screen right here, Bitcoin 5,500 USDT bonus, where I've highlighted for signing up with my referral link. BingX is 5,000. You can see it right there on the screen. Check out all links down below. Right. So again, we've looked into kind of the rate decision in the introduction here, but just to clarify a couple of things about traditional markets before we look at Bitcoin too much. The bond market was demanding an interest rate cut. The reason why we saw massive degrees of uncertainty over the last month on Bitcoin and on the S&P 500, because of course Bitcoin and the S&P 500 move due to the same factors, and so they act as though they look as though they act together and they're connected, but they're not actually connected. If you look at my hands right here, the S&P 500 and Bitcoin are not connected in a rudimentary format. They're both connected to the same thing, right? Which is the macro economy that pins them both together. Okay, so they're not actually connected. They just look as though they're connected because they're connected to the same thing. They're correlated, not connected. But overall, if we look at the bond yields were demanding an interest rate cut last month. The Federal Reserve decided not to cut, even in wake of bond yields going downwards. This led to some fears about the Federal Reserve potentially intentionally allowing the markets to go downwards. And this was causing some uncertainty. And luckily, the Federal Reserve deciding to cut 50 basis points instead of 25 has brought the Federal Reserve back to where they need to be in relation to the bond market. So this 50 basis point cut has brought everything back to where it's meant to be. The only concern that lingers now, in my opinion, which could actually come and spiral into something more major, by the way, it's not off the table at all, is unemployment. Okay, if we look at unemployment right here, we can see very clearly unemployment generally has a habit of rounding out and then spiking to the upside, right? It's happened so many times now. In fact, it's happened 11 times, okay? And 8 times out of the 11 times that it's occurred, we've seen a recession. Now, it's happening again, okay? Unemployment is rounding out. It could spike to the upside. We saw a little bit of a downtick upon the last unemployment data release. Let me show you on the screen here. Tiny downtick. So that gave some optimism, some hope. Apologies, I have eye allergies right now, so my eyes are a bit itchy. if you noticed that. But yeah, that gave us a little bit of hope that we spiked to the downside a bit there. But of course, if we're looking at the historical data, as I said, we've seen this 11 times. We've seen this the rounding out and spiking to the upside 11 times, and 8 of those times it's led to a recession. So it's not off the table at all, and we need to be very aware of that. If unemployment spikes to the upside, that's going to be quite concerning. It's not a guarantee for a recession or anything like that. It's not a guarantee for markets to go down, but it could be very concerning. Now, the good news is as well, look, markets only have to last until the end of next year. All of the regular cycles, 4-year cycle, presidential cycle, election cycle, what's another one? 18.6-year real estate economic cycle. All these cycles last until around late 2025. So if unemployment just holds off until late 2025, like over here, for example, and then decides to spike to the upside, that would be fine. That's what we're hoping for. Unfortunately, that's not what it's done historically speaking. So we're just going to have to keep a close eye on unemployment because it could be spiking very shortly. And there's actually been various recession indicators that are triggered. The Stam High Rule recession indicator is one, for example, that is triggered, that is warning about unemployment leading to a market downturn. But we can't be judging our entire market analysis based on unemployment data, especially considering it hasn't actually really spiked yet. And right now, even in wake of it rounding out, the S&P 500 is actually breaching all-time highs as we speak. So it's not necessarily too logical to judge it just based on unemployment. And also the 50 basis point cut is great because that staves off concerns that the Federal Reserve was allowing the downturn to happen. They're actually bringing rates to where they need to be. So I'm not too bearish about the macro economy right now. I'll tell you right now, it's great to see a 50 basis point cut. If that was a 25 basis point cut, as I mentioned yesterday, it would have been very, very concerning because then we would have had 2 lingering threats, one of them being rates are not where they need to be, and one of them being unemployment is spiking. Now we've only got one real concern. So it's narrowed down the concerns, and this is obviously increasing optimism in the market, but I want to make something very, very clear to you, okay? We're not in the clear yet. We're not in the clear yet. Let me say it another time. We're not in the clear yet. We are still in the exact same macro structure. Nothing has changed on the macro structure scale for Bitcoin I'm speaking about now. The descending wedge channel formation that has underpinned Bitcoin structure for about 5.5 months is still exactly the same. We have not broken it to the upside. So nothing's changed from that regard. Now, the probability for that breaking to the upside has increased due to what we've seen in the macro economy over the last day, but it hasn't actually occurred yet. So in analysis, it's always best if you're doing macro analysis, if you're doing macro buying, you need to make macro buying and macro selling decisions based on macro price action, right? That's the general rule of thumb. If you're doing short-term buying, short-term selling, you make decisions based on short-term price action. If you're doing medium-term, you make decisions based on medium-term. If you're doing long-term buys, you're going to hold coins, you're going to hold altcoins, hold Bitcoin. You should be doing it just 101 TA based on long-term price action. And we haven't actually seen a long-term breakout or breakdown yet. So we're just in the middle of the long-term structure. It is a bullish uptrend, so we can lean macro bullish, but to say that we're just, bullish right now, right here, and everything's going up right now is illogical because we haven't actually broken the structure yet. We're still in a 5.5 month consolidation. Now, there are things we can look at, and we're going to look at all of these things tomorrow, such as the wedge formation on the weekly chart RSI. Very good news to see that breaking to the upside. We have not seen a close yet. Again, we haven't seen the confirmation, but it looks good, just like the price chart. And of course, the MACD coming in for a bullish cross. But again, we haven't seen the cross. It just looks like it's going to cross. So none of this is really confirmed. But I'll tell you what, everything looks a bit better than it did yesterday. And that's the good news. And that includes medium term. Bullish divergence on the daily chart. If we're looking at, we had the low right here, it went down to around 49K, another low right here down to 52K. That's a higher low. A higher low is generally the first step in creating a new upwards trend. And we have been in a downwards trend in a descending wedge formation, descending channel formation, So it's great to see these reversal indicators. But again, if we're looking at the daily chart RSI, very strong RSI resistance, which we are now testing for resistance right now. We have not broken it yet. We're just right on the cusp of breaking it, but it is not broken. So a lot of things that look great, a lot of things that are starting to look great, but nothing that actually has been confirmed to be great. So it's important to not let the hype get to you. Although the market is starting to look good, nothing's actually really happened yet. That's the simple reality. We've seen shifts in the forces that move the market to the more bullish perspective now, but that has not led to actual results yet. Short term's looking good, but again, same story. We've continued the upwards trend. We've breached above a couple resistance zones here, namely 61.3K, which was acting as resistance just before the FOMC release. But again, if we're looking at where the price actually is in relation to the bull market support band, we've just rejected from the top of the bull market support band, at the same time as rejecting from a daily chart RSI, so nothing's really happened there yet. Just more probability, the probability of the upwards price action is being stacked and stacked and stacked, and it's getting higher and higher and higher, but it hasn't actually triggered yet. So that's my overall point in this video. It's great to see the FOMC cut of 50 basis points. That was the best scenario we could have hoped for, in my opinion. Some people disagree with me on that, but I believe that was the case. And yeah, look, DXY still at support. Again, we need that to break down. Just a few things that need to occur before we can fully jump on that bullish bandwagon. But right now we are, we've bought our ticket to the bullish bandwagon. We just haven't registered it with the ticket attendant and boarded the fucking train. Okay, that's my, sorry for swearing there. That's my kind of analysis of the situation. So guys, I hope you appreciate the content. Thank you for watching. Leave a like, comment, subscribe. Bitunix and BingX, again, 15% trading fee discount with my referral link down below. You can check them out. I actually have a second channel where I've developed a podcast. I released an episode 2 days ago on free will, the philosophical argument and debate around free will and consciousness. So if you're interested in that, check out the podcast. It's JS Quinn. I appreciate you checking it out. We've also got a VIP group on Telegram, guys. I post altcoin trading signals 4 times a week. I'll be posting one later today. Over the last 24 hours, we've had 2 breakouts, both of which reaching targets. So that's good stuff to see there. And if you're interested in that, check it out on Telegram. We've also got a group chat, and we've got our trading results in a PDF document. You can check that out. It's all transparent there, every single win and loss. As you can see, we developed this group in October 2022. So we're going on 2 years now. It's been a very good 2 years indeed, with a 78% win rate. The last thing I'll mention is the Crypto Academy's become a Trader 10 unit course, which is on sale right now. If you want to learn how to trade, okay, you can do so. All the information's on the website in the Become a Trader course. As per the title, if you do this course, you could become a trader, or you'll have the knowledge base to do so at least. So check out all the information on the website, guys. Thank you for watching. I hope you enjoyed, and I'll catch you tomorrow.